Hey guys, welcome to the daily analysis for December 26th. Hope you guys had a wonderful Christmas, and I'm sure the audience will be a little bit light for those of you who are still on Christmas break and might be seeing this video later. But just because it's the day after Christmas does not mean that the markets are not moving. You can see that I have the US yen right in front of me, and it is off to a pretty massive day. It's a little after 3 o'clock here Eastern Standard Time, and I'm just going to go over the markets real quick, give you my point of view, even though we're not really trading here, waiting for the new year, but I'm still watching the markets just to see what's going on. And so it'll be probably a shorter analysis because there's not really a lot of trade setup or trade info along with the analysis, but nonetheless we do want to cover these charts. Okay, so let's take a look at our outlook for the news, and then we'll get back into the charts. Alright guys, and for news tomorrow, there's 3 events you can see there: unemployment claims, consumer confidence, and new home sales. Unemployment claims is typically our big Thursday announcement, and it will be in play even though it's just a few days after Christmas, so you definitely want to keep an eye on that in case you do have anything open, although I assume that most of you do not. Now one thing to note is that if the liquidity in the market is very light, a big deviation or news announcement could move the market even more so than it typically does. So that'll be an interesting thing to watch out for, and that'll happen at 8:30 and then again at 10 a.m. So those are really the 2 times that we'll be looking for news. Okay, and that will be that. Alright guys, and just to quickly cover our terms for legal purposes, we just want to be very clear in letting you know that this is not an investment service or investment advice. This is only our opinions of the markets for educational purposes only, and we just want to make sure that you're very clear on that when watching the daily analysis. Okay, so if you need to read through that and make sure you understand it, please feel free to do that. And I'm going to go ahead and slide over to the charts. Alright, and again, as I mentioned, the US yen still certainly on a quite a move to the upside. You can see how steep this move really is, almost straight up really. And today, about as big as bar as any. And actually, this top red line that you see here is actually the previous high, which goes back to I guess May of 2011. Let me scroll back here and see. With this high, April of 2011 is the next peak, which is what we're breaking through, and anywhere above this line, this price would be a high that has not been touched since September of 2010, which is a pretty big mark. So this is kind of like the last major resistance before the next level, which let me scroll back once again and give you an exact price on that. The next level is only about 25 to 30 pips higher, which is in September of 2009, but then our next level, which is the big one, goes all the way up to about 88. Okay, so those are really the levels that are being at play. Just one is just a few pips higher, so we'll see if it struggles here around 85.8 and 86. But then after that, the next level, which if I scroll down here a little bit, you can see would be 88, which is a pretty big mark. That's over 200 pips from where we are now. So we'll see how much juice this US yen has in it left. Obviously, you can see again how steep this is. That it's ready to pull back, or at least it appears like it's ready to pull back. And so a reversal you'd expect to be pretty intense based on how high it's plunged to the upside. That plunge would be matched to the downside. But of course, that's just an assumption. We might just get a standard pullback and a continuation of this uptrend if the yen and the Bank of Japan continue pushing all of that yen weakness, which is of course great for their economy, and definitely something that would not be surprising in the landscape of things. So keep an eye on this US yen. Could be one of those very steep bullish trends that actually last quite a bit of time. At this point, we've really been going for about 3 months, almost straight up, and we will see again how much continuation that really has left in it. We looked at the weekly chart before, and you can see the reversal signs in the weekly chart are pretty intense, and are really showing some long-term potential there. So again, I don't think this is necessarily going to stop and turn just because it's been going this far. I think the US yen has potential to go much higher, and we'll see if that comes out to be true over the next few months and even throughout the year of 2013. Alright, next we have the euro dollar, and again the euro dollar is in this range, or was in this range before it broke out last week with a pretty solid break, but now it's just sitting right on top of the support level. So the question is whether we're going to continue this upward momentum from much earlier in the year in 2012, whether that's going to be the theme of 2013, or if it's going to be more of a break right back down into these ranging markets. Right now, again, the signals are not very strong for bullish continuation. It did spike up pretty nicely to about 133, but then came right back down, and again is now sitting at around 132, right above this level. So in order for us to find signals to buy, especially coming in the new year, we'll need to see some good, strong continuation of the bullishness here, and then of course, try to take advantage of that trend when it does exist. And at this point, it really doesn't. It's just kind of now ranging right on top of the previous range, which doesn't really provide a lot of great signals. So that's the deal with the euro dollar. In my opinion, just a waiting game to see if there is some trend continuation that forms at some point here. The pound dollar obviously made a very nice reversal signal during the last analysis that we talked about off this top level, a very large reversal movement, and started continuing. You can see a nice tail bar continuing now, or excuse me, the day before. But today's bar is a little more of a stall bar. Started up bullish pretty heavily, then began reversing. We are sitting pretty much right at this top level with these tails, right in these pin bars. So it's pushing off a pretty good level, but whether or not that can continue in the midst of this upward move is yet to be determined. It's looking very reversal oriented on the weekly and also on the daily with this strong momentum. But again, you do have some upward movement here. Upward movement here, and then also the recent leg, as I pointed out here. So both of those are relatively bullish, and makes it a little more difficult to look for these sells in this continuation of this move. But again, price action will determine whether or not this is really heading down. Obviously, we'll have a major level at the bottom here, and then a very big level at the bottom near 153. So for price to get all the way down here, it'll be around 750 pips, which is a massive move, but not impossible when you look at the weekly chart and kind of the sideways market that we have going on there. Obviously, for that to happen, there's going to need to be some pickup of momentum on both the dollar strength and the pound weakness. Right now, the dollar's been pretty strong, but the euro has hung in there with some strength, which makes it difficult for the pound to drop against the dollar. And that's just something that we'll have to wait and see if there's a shift in that in the near future. The odd has pretty much continued to move down. Obviously, we're seeing a bit of a stall bar today, but the break to the downside is looking pretty legitimate at this point with a nice continuation bar from the day before and a stall today. So we'll see if we can pick up some continuation and keep heading down. Obviously, again, there's some major levels to be concerned with. This is a pretty good level in itself right here, and then obviously a pretty big level around 102. So certainly a few levels to keep in mind there, but if it's able to break out of the bottom, again around this 102 level, we can talk about continuing this sideways market and coming all the way down toward the 96.5 area, which, like the pound dollar, is a very large move, but not really that unlikely when you look at the weekly chart and how sideways this has moved and how frequently it is fallen to this level. I mean, you can just see from this crash how quickly it fell to that level with a major move. So not impossible, but obviously again the dollar is going to have to continue to be very strong, and the odd is going to have to continue to be weak, or you're simply not going to see that continuation, that momentum. So that'll be some fundamental analysis that we'll take into account there, and also how much momentum we see in the technical side of things with the charts picking up. It'll be interesting to really see how far this can go if the dollar does continue to be strong and the stock market does continue to fall, and that inverse relationship occurs. We will just see how much potential to the downside these have. Can it be in something like the 2008 crash where everything fell against the dollar, or will it be a minor pullback and a continuation of the weakness of the dollar? Both are obviously very possible, but both have very different outcomes. Obviously, if you're short on the dollar and things do crash against it, you're going to lose a lot of money. But if you're playing the long term and the dollar does continue to weaken, then you're going to make a lot of money. So pretty much both opposite effects there, and it'll depend on exactly how long this dollar continues to gain strength. If the U.S. economy continues to remain poor and the stock market goes down, if all of those things are happening, fundamentally speaking, the dollar should continue to gain in value, and all of these reversal potential trades that we're seeing in the market could end up being very massive moves that are able to be taken advantage of. For instance, we are short on the pound dollar from a while ago, and there's some serious reversal potential that I just showed you on that, and that could be a 700 pip trade, or it could just be a reversal right back up to the upside. And when you're in a trade, having such opposite possibilities and both high probability possibilities makes it a little tricky to trade because you never know, if you're in a trade that's going to set you up for the rest of the year with a 30% winning trade or something massive like that, or if you're in fact in a trade that's just going to lose your standard 1 or 2% and have to move on. So it'll be interesting to see again how long that can hold up, if it will hold up, and if the dollar gains strength throughout the year of 2013. I personally believe that's a pretty high possibility, assuming that the stock market is going down and the economy remains, continues to get hurt, which it looks like it will. So dollar shorts are not looking as appealing right now with everything else in the actual United States economy looking pretty bad. And that's really just the fundamental side of things that can definitely change. Typically they don't change as fast as the technical side of things, which can reverse back and forth day to day. The fundamental things tend to stick around a little bit longer term, and fundamentally speaking, the U.S. economy is looking pretty rough, which definitely does have an inverse relationship with the U.S. dollar most of the time. So we definitely look forward to strength on the U.S. dollar if this continues with bad economy signs in the United States economy. Okay, so sorry for that rant, but that goes for all those dollar crosses that we mentioned. Throughout the entire year of 2013, you can either be on the right side of the dollar or the wrong side of the dollar, and depending on which side you pick, that can be a very profitable or very unprofitable year for you. Obviously, we want to figure out which side is going to be the right side early and take advantage of that throughout the year, which is going to be our goal. And again, at this time, before 2013 even has started yet, it's looking like U.S. dollar strength in the Forex market is going to be pretty prevalent. So we'll see how that changes month to month and even day to day. But long term, that's looking to be the way things are shaping up. Now, to take a look at a non-U.S. dollar pair, we have the euro pound, which has definitely continued this upward move. Obviously, you can see this most recent leg has made a new high, crossed over the 81.6 area. And if you remember, I mentioned that it was I expected price to break above this level. I didn't know if it would take a long time or not, but obviously didn't take long. A little bit of struggle here and a pop through the level, and now a continuation of that. I'll keep an eye on this level and watch for a retest before continuing, but I definitely think that this uptrend has been validated with a nice new high, and any pullbacks back in this trend line area would seem to be great buys from this point on, and obviously a pullback right into this area as well. So two great areas to look for buys in the coming days and weeks on the euro pound, and if this uptrend continues, we'll have obviously a lot of great opportunities to come, so keep an eye on that for sure. And then lastly, I just want to bring you back to one more U.S. dollar pair. We have this major level. If I scroll back, you can see that it's been tested quite a bit here on the USD CAD. Definitely a level to keep an eye on. And right now, after the USD CAD broke back down, came around close to 98 and then started rounding back up, as you can see now. Pretty strong break off that level, and now it's hooking back up. So it seems like this one area, parity, will be in its sights again, and there might be some good buy opportunities to take advantage of it moving back into this level. Now, of course, the one issue is right now might be an opportune time. However, the market conditions are not really suitable for active trading, so that makes it a little trickier. But we will see if the market does stay and kind of hang around this area until January gets underway. Any break above the little range that it builds would be a good buy to try to catch it into this one area parity. Actually, it's 1.05 really, and then a break to that upside would be pretty high probability trade. So we'll see if it ends up hanging around and ranging there. I misspoke because parity is actually a lot closer. It's right here, but the 105 level is actually the major resistance level, 50 pips above parity. So excuse me for that mistake. But we'll see. If price hangs around, it's in somewhat of a range at this point. You can see the consolidation here, and obviously starting to happen here. But a break above that, again, I think would definitely be a 105 target area, and I assume that'll be where it wants to go. So certainly keep an eye on that, and I'll leave you with that as far as the analysis today. Alright guys, thanks again for watching, and we'll talk to you soon.